What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss the fourth stimulus check update, the stimulus package update, pretty much everything you need to know about what's going on in our country, Washington, D.C., the stock market, daily news, everything you need to know about in our country. Remember, new videos come out here on our channel every single day on a daily basis. Don't forget to hit the like button for us down below if you appreciate these new videos. Speaking of the stock market, as being reported here by Yahoo Finance, the stock market has posted the best week since July after earnings report and retail sales tops July estimates as reported by Yahoo Finance. So yeah, the stock market has really been on a tear since the debt limit has been passed and has now been kicked the can down the road. So yeah, since Thursday night, since the Senate passed the debt limits and the country is no longer at risk of default, at least for the short term, the stock market has really been on a tear here and has posted the best week since July. So things are really on the up and up here, at least for the short term. But after Wednesday's announcement of the CPI data, the markets don't seem to feel that we're out of the woods completely just yet. On one hand, everybody agrees that inflation isn't as transitionary and as fading as perceived as before. We are seeing a lot of inflation in gas prices, in grocery store prices. We've seen a lot of comments down below in the comments section. The grocery store prices are really being inflated. Gas prices just hit a 7-year high. A lot of people are really feeling the pain at the pump in gas prices and grocery store prices all across the United States right now. We all live in a world of supply chain constraints, and this is really not going to change for at least quite some time. Biden did just make that change at the port of Los Angeles and Long Beach, but really this is going to go on for quite some time, for at least a while. I mean, that might help alleviate things a little bit, but this is probably going to go on for at least a year or more. Secondly, the Fed can't solve supply chain issues. It can raise interest rates slowly. It can combat inflation a little bit. But honestly, if you want to protect your retirement nest egg or your savings from inflation, listen to what I'm about to explain. Inflation is here, and I don't think anybody can no longer deny that. Everybody is rightfully complaining that conditions for buying vehicles, homes, and anything for households are the worst they've been in about 40 years, as you can see here from this chart. People are not stupid. They see the congested ports, unprecedented money printing, issues with commodity shortages and food prices, and they're saying that inflation expectations are surging through the roof. And we're seeing this with, again, gas prices, food prices, pretty much anything you go to buy at this particular point at the store. Oil prices are soaring as well. In fact, oil just crossed over $80 a barrel. And zinc prices are rallying to crazy highs as well, as you can see at this chart as well. In fact, if I could sum it up in just 3 words, it would be to the moon. The market is concerned about industrial metal supply, reflected in a record high for the raw industrials spot index. So why should you care? Why? Well, because inflation is eating away at your pension, your grocery bill, your salary, your savings, your gas bill, and well, you need to act. The Fed was wrong. We know it, and now they have come out and they have fully admitted it. Supply chain constraints remain a major crisis and will not be letting up anytime soon. The infrastructure bill is stuck. They have to pass the stimulus package beforehand, which will provide relief to millions of Americans, basically the entire country. Child tax credits, maybe a fourth stimulus check, the monthly relief to 65 million children, Medicare to seniors, Medicare 2.0, housing relief to low and middle income earners that need housing support, all sorts of different things that they're discussing, 2 years of free community college, all sorts of things. They can add a fourth stimulus check on top of that, all sorts of different things that are being discussed right now for this next stimulus package, and the infrastructure bill has to come after that. So the infrastructure bill could still be a ways off. So my point is that you really need to act now for inflation. And we really aren't going back to a pre-COVID world. And what CEOs are telling us is they haven't even really passed on the majority of the costs onto consumers yet. Yeah, so that's what I call a risk of delayed inflation. And that could still be coming down the road, delayed inflation that large companies could be still passing on a lot of cost in the future to us, the consumers. What's the rush? Well, last week, for the first time in 2021, it's not just you and me on Main Street who sees inflation in our grocery bill. It's Wall Street that sees it. And that means that billions and billions of dollars are about to go into gold stocks. The gold stock sector is small, and yet the amount of money looking to own gold mines yet will be enormous. I'm calling Altalay Mining, which is a US stock symbol ATLYF, which you can purchase on all the traditional brokerages like Fidelity, Schwab, E-Trade, Interactive Brokers, Vanguard, and others. My #1 gold move right now. Altalay Mining, ticker symbol ATLYF, is the sponsor of today's video, and there are major reasons it has enormous upside potential in my effective view. Check this out. First off, it's the cheapest of its peers. Check out this chart. In order for Altalay Mining to trade at par with its peers, it would have to triple in price, turning every $1,000 into $3,000. The risk-reward equation here is nearly perfect, if I may say so. You're going to see a flood of money rushing into inflation hedge assets because for the first time in 2021, the market got Jerome Powell to admit that inflation is here to stay. I just showed why Altalay Mining, ticker symbol ATLYF, which you can become a shareholder through any of the traditional brokers like Schwab, Fidelity, Scottrade, E-Trade, Vanguard, is not only the cheapest of its peers, but has 3 major catalysts dead ahead. This is my personal #1 pick ahead, and a lot of people are just going to stand there and watch their savings dwindle. Many others will say that they didn't see it coming or some other excuse. And really, it can be any other story that what will happen. But reality of it is inflation is here for at least for the time being. Gold is going to become a must-own asset. And companies that are attractive and cheap, like Altalay Mining, ticker symbol ATLYF, and who are building new gold mines will attract enormous attention. The beauty is that they also own a zinc mine, and that metal has just hit a record high. In terms of timing, I'm telling you that this is it. In the coming days, Altalay Mining might be on the radar of other people, but we have time before tomorrow to do our research and realize that what the potentially we might be sitting on. So feel free to do your own research and do your own due diligence. So this is just a quick video. I will have more videos for you guys every single day. Of course, you know I'm here every single day with you guys. So let me know your thoughts down below in the comments. Let me know your thoughts on inflation. And of course, we've been seeing inflation on a day-to-day basis with gas, grocery, and the stock market has been on an absolute tear since last Thursday when the Senate did pass the debt ceiling increase. So there is a lot going on here in this picture as well with the stimulus package. So I will be back tomorrow with more video updates for you guys. So make sure to stay tuned. You can click here to watch my newest stimulus video. Thanks guys, and I will see you in the next video.